Cathie Wood and ARK Invest just poured $42 million into this stock, which I think could very well be the next AMC, the next GameStop, the next short squeeze stock that a lot of people are going to be talking about. It has all of the right ingredients. It has an over 24% short interest. It has a massive community, and the best part of all of this is that just the other day, Hindenburg Research came out with a really bad report saying how terrible the stock is, how they are going to be shorting it big time. And we know that whenever a company comes out and says that they're going to be shorting a stock, Wall Street bets, the entire AMC community, the entire GameStop community rushes behind it to get behind that stock to make short sellers, and institutions lose a lot of money. We're already starting to see this happen. This stock is ranked number 3 in terms of how much people are talking about it on Wall Street bets in the last 24 hours. People are starting to pick up on this. So in today's video, I'm first going to go over exactly what the stock is, why I like it regardless of what is going on with the short sellers report, regardless of what's going on with Cathie Woods. I've been invested in this stock for a while. After that, we're going to go over how much money Cathie Wood and ARK Invest put in, a couple of specific details on how large this holding is in relation to their entire portfolio. And at the end of the video, make sure to stick around because we're going to go over some key details of what is going on with this short seller and how they said they're going to start shorting this stock. So we're going to put timestamps down below for everything so you could skip ahead to any portion of the video that you want. And if you don't already have the public.com investing app, make sure to go ahead and follow me on that. You can buy stocks, sell stocks, and see exactly what I'm buying and selling in real time, as well as a full portfolio breakdown. Think of it like an investing app combined with social media. It is completely free to follow me. Use the code Michael when you sign up, and you'll get up to $50 in a free stock. But anyways, the stock we're going to talk about today is actually DraftKings. I love DraftKings stock. There is so much to going for it right now, despite the short sellers report that's recently came out. So first of all, why I like DraftKings. DraftKings has been absolutely beating every single expectation from analysts in terms of revenue, in terms of growth, in terms of how much money they're making. So in the first quarter of 2021, they only lost 36 cents per share versus what was expected, 42 cents per share. In addition to this, in terms of revenue, they generated a lot more revenue than people were expecting as well. They had $312 million in revenue versus 236, which was expected. In addition to this, in terms of monthly users, they're growing at a very rapid rate. They have over 1.5 million monthly unique paying customers. Each of these customers generate about $61 in revenue for the company, and this is only growing. So on top of all this, on top of them beating all of their numbers, the other thing I like about DraftKings right now is that currently we see about 30 US states who have legalized sports betting and online gambling. And the thing about this is that we are seeing this number increase every single day as more states are proposing bills, as more states are passing laws, and we're already seeing this start to take place. Right now, there's 30 states that have already legalized it, about 2 dozen have it operational. So that means DraftKings has only started. They only have about half of the market opportunity. There is so much more room to grow. Once more states legalize sports betting, there'll be more market for them to capture. In addition to this, what I also like about DraftKings is they have major partnerships with some of the largest sporting leagues in the world. They have a major partnership with the NFL, the UFC, the PGA Tour, and a number of other sporting events. So this is something I really like about the stock, regardless of the short sellers report, regardless of, what's going on with a short squeeze. But on top of all this, the good news, the thing that could cause this stock to reach all-time highs, double, triple in value very quickly and experience a short squeeze is what is going on right now with the short interest. So right now, DraftKings has a short interest of right around 24%. The short volume ratio is right around 24%. This is very high. If you look at this in terms of DraftKings versus AMC, AMC short interest is at 26%. So if we're just looking at DraftKings versus other meme stocks versus other stocks that have experienced a short squeeze, it's right up there on the same level in terms of how much the short volume ratio is for DraftKings versus other stocks. In addition to this, the other thing that I really like about DraftKings is that if you're looking at short interest, it's high. But the other thing going on is that we just had a massive short sellers report that came out the other day. And this short seller report was from Hindenburg Research. They said how they're going to be shorting the stock big time. They don't like it. They're shorting it. And as soon as they said this, the stock price dropped massively. It dropped. You can see right here is when they came out and said it, and it dropped. You can see right there on the top of the screen. As soon as they came out and said this, it dropped from it dropped about 10 to 12% immediately. So that is something just to keep in mind. You can see it went from right around $50 per share all the way down to 44, dropped over 10% as soon as they came out with this information. So that's something to keep in mind. It was really an overreaction in my opinion. I bought it immediately. I told everyone on Public Investing app who follows me. I told everyone there that I bought some. I gave some reasons why. Free to follow me on there, so make sure to check that out. Make sure to download the app. Just use the code Michael and you'll get up to $50 in a free stock. But either way, I think this is a major overreaction. In the short seller report, what they explain is the research firm basically said that DraftKings, their gambling technology subsidiary, SB Tech, which makes about half of its revenue from in countries where gambling is banned. And according to the report, they said SB Tech created an entity for what Hindenburg calls its black market operations. Completely illegal. This is what they said. They said that right now DraftKings is essentially doing business in areas and countries where it's completely illegal to be doing online sports gambling, online betting. And actually, DraftKings came out and responded to this, and that's what we like to see. Whenever someone puts out a report like this, they're just really spreading a lot of FUD, a lot of just fear in the market to get people, to get the stock price to drop, which is exactly what we saw, which is exactly what short sellers want. However, the good thing is we saw a DraftKings spokesman come out immediately say that SB Tech does not operate in any illegal markets. We conducted a thorough review of their business practices, and we were comfortable with their findings. This is what we want to see. We don't want to see them, play this off or not address it. They addressed this immediately. As soon as this information came out, they said, look, we are confident in our business. We know we're not doing business in areas where it's illegal and where gambling is banned. We know that we are following the rules, and that is exactly what we want to see. So in my mind, I looked at the report. I'll link it down below. I think it's just to spread fear in the market. They've done this with so many other companies, and some of those have been short squeeze stocks like Clover Health. Hindenburg Research came out a couple months back, spoke about Clover Health, said how it wasn't following certain regulations, and we saw Clover Health stock price drop. Since then, it has been one of the candidates for a short squeeze, and that's one of the reasons why I think DraftKings could be the same candidate. In addition to this, like I said, I like DraftKings despite that report, which I think is really just spreading fear in the market so short sellers can make money, which they probably already have. It went down 10% yesterday. But the thing that I like in addition to this is normally everyone's talking about retail investors versus institutions, retail investors versus, hedge funds. But the thing to keep in mind is that what's even better about this situation is that it has that high short interest, and now ARK Invest actually came out just the other day and poured another $42 million into this stock as soon as that report came out. Cathie Wood, it says they bought $42 million as soon as DraftKings dipped when the short seller report came out. I bought some too, spoke about it on Public Investing. They bought about 870,000 shares of DraftKings. They bought it at right around at the market open, so they spent about $42.2 billion, and then at the end of the day, the price was already at $48, so they made a good amount of money. But I think this stock has a lot more room to grow. Currently, DraftKings is in the top 20 out of all holdings for ARK Invest. They own a lot of this stock. It makes up about 2% of their entire holdings, which it may not seem like a big number, but it really is. 2% for a company that has billions and billions of dollars under management, that's a lot of money. But right now, what we're seeing with DraftKings is we're seeing a lot of fear in the market. We're seeing that a short seller report came out. As soon as that came out, it became an immediate target for Wall Street bets and retail investors. We see right here, it is ranked number 3 in terms of how many people are talking about it on Wall Street bets. This is what I like to look at. A lot of people don't talk about this right here, but what you can see is that CLNE is the most talked about stock on Wall Street bets right now. The second most is AMC. The third most is DraftKings. This rose up there. It wasn't even on this list of the top 10 yesterday. Now it's number 3. So just something to keep in mind moving forward. I really like this stock. Earlier in the year, it was as high as about $72 per share. back in March. It was at $72 per share. So I think it has a lot of room to grow from where it currently is at. I think with all of the negative news, with the short interest, and with how strong the community is, I think there's definitely a chance that we could see this stock be the next target for retail investors to see a massive short squeeze. It has all the right ingredients: short interest, it has the community, and it also has pretty decent volume in terms of how much money is being, how many stock shares are being traded every single day. So something just to keep an eye on. But let me know what your thoughts are on DraftKings. Are you invested in it? Do you like it? Do you like it long term? Do you think it's just a short squeeze stock? But I hope you guys enjoyed today's video. Just a bit of a quick update on what's going on, and I'll see you guys in the next episode.